A green candle opens on the bottom and closes on the top. If you see 3 green candles, it means it was closing higher. That means if it's a 1-minute chart, the market was going higher within 3 minutes. To expect that the markets will do again 3 more green candles, as you see here. In this case, you see 3 green candles, and then you see only 2 green candles and 1 red candle. But fact is, the market was going higher, and I call this cash flow creation. Very often, make the chart very small, because very often the market will do almost the same length in retracement. I love, for example, just to use the square as you see here, and when you place it on the highest point and you measure it down of the retracement, wait until the market did the move. You can see now when we take this retracement here that the market does almost the same retracement. So green candles within this length are very good actually to trade up the market, right? And that makes this trade here that you see here, or this trade here, such good trades, because you see how the market does the cash flow. It does 1, 2, 3 green candles. And the next candles are red, green, red. But you see that the market does, because it did within 3 green candles this move up, it did within 3 minutes again the same move up. And this is something what is very important. Sometimes it takes us even 5 minutes longer, but it's something that you understand in what direction the market goes. And this will help out your trading, because in trading we make money in trading into a certain direction. There's a 3-step method that I always use for my trading, and it will make you a better trader that you can use after watching this video. Step number 1 is to understand where the market wants to go. The market aims always for bigger structure highs or bigger structure lows. A high is always a green candle and a red candle. A low is always a red and a green candle. And the meaning behind this, because a green candle, as I explained in the beginning, means it opens on the bottom, it closes on the top. It opens again and it closes on the top. So it means there's pressure because the market goes higher. Now a red candle opens on the top and closes on the bottom. And it takes, when it's the S&P 500 futures, the 500 biggest American companies, it takes a lot of money to press against a green candle. If you just trade gold, silver, or any smaller market, it doesn't take that much money than in the S&P 500. We're talking about like almost within 1 or 2 billion buying power just within the small red candle as you see here. So it's pretty hard to move the market, and it's also more to trust smaller stop placements if you ever use that for your trading. So if we have 2 green candles, it shows us the price was going higher, and now somebody with a lot of money was pressuring against that direction. What shows us here the red candle, and this is called a high. If we have another high in reference, such as here's a green candle, here's the red candle, this is called here a lower high in reference. Sometimes you will find green and red candles also down here. But keep in mind, if the market starts to make a retracement within this length here, from down here to up here, some are even also measuring on here, but I'm measuring it from here, then the market very often does the same length of retracement as you see here. So then taking here also the color switch as you see there. Very important. So step number 1, you understood now what a high is or a low, and the market is always aiming for bigger structure highs or bigger structure lows, such as here. Okay, because I don't want to explain now inside here this movement. It's just that you understand that the market is aiming for these kind of references. If the market doesn't touch it here, the longer the market doesn't touch it, the more relevant it is. This is something what's very important. All these color switches are very important until the market touches it like here. And then it's just gone, like it has no more meaning. Now, because it's a US market on the US session time, in this case, we have punched in here New York time, that means 10 a.m. This is where it makes sense for me for the market. 9:30 a.m. New York time, the market opens. And then starting here, it boosts in a direction and it wants to aim for the biggest structure highs or lows. In this case, the biggest structure highs are here because you can see it within the structure. You can also take this high here, for example, right? Like these highs are very relevant. So when you look at it now, starting 10 a.m., the market kicks out this high. It touches out this high. And then you can see it does a retracement. Then it touches out this high, does a retracement, and it kicks out these highs here as you see there. So step number 1 is to draw in the reference. What do you see makes sense? Does it make more sense that the market goes up to these white lines? Or does it make more sense that the market goes to the bigger structure low, what lays here? And in this case, obviously you see that the market is going to the highs. So we proceed now to step number 2, because we are assuming now the market will go to this white line. And that is now to read what kind of retracements does the market do. If you see that the market is in a contraction phase, such as here, and has here a lot of candles, most likely the market will come back. But what happened is at 10 a.m. there was a specific news, it was pretty positive, would be too complicated, but if you see that the market spikes up and it pressures up starting here where my mouse is, using your experience, we trade up to these reference, such as in case maybe it's better this high here because this is more near than the high to the left. So step number 2 is literally make sure with the experience, can you see that the market goes to this reference? What I really love is to draw in a contraction phase and to say like, I want to trade back to the contraction phase. Or if I can see the market pressures up, measuring the retracement here, placing it always on the tops, until I can see the market does around the same retracement, what makes this green candle good to trade. Or if I can see then that the market pumps up here, that I'm looking forward, can I buy using a green candle? And then that's step number 3 then, because I can see the market does a lot of green candles, aiming for this reference. Because in step number 2, we see here 3 green candles. The market within 3 minutes does this movement. The next 3 minutes you see here, even though it's a red candle, it does here the same movement. 1, 2, 3, same movement. And this is no magic. Like if you see every 3 minutes, the market does this movement up, to assume the market the next 3 minutes does the same movement is very realistic. In this case, it took 5 minutes up here, as you see here, instead of 3 minutes, because those are 5 times 1 minute candles. And this is called cash flow creation, what is very important. Now, if I estimated cash flow, like that the average movement has this length, then if I can have this small candle here and aim for here, my risk reward in this case is 3.75. That means if I adjust $100, I would adjust $100 because I have enough leverage, and my profit would be $375 aiming for this high here. If I can see that the market is aiming for multiple structure highs, and I assume because it kicks out more the highs than the lows, like it can't reach the lows, I'm assuming the market will reach for this high, I can increase my risk reward almost into 5, as you see here. That means now I can lose $100 multiple times. If I make one time this trade and I win 5 times of the amount what I was risking, I make $500. Now, I was getting the question, what is if we can get a risk reward of 35 or like 50 or whatever, like we put in $100 and we get $5,000 out. The thing is, we maybe have 30 losing trades or 40 losing trades, and that can be profitable. But the problem is, it depends how the trader can do that. And what I think is very important is to have multiple winning trades. I always like to have a consistency inside. And the consistency comes with a risk reward ratio of 5 and a 1 minute chart to orient on the candles. Because if the market has 3 green candles like within this length, and you can see literally that you can have a very tight stop placement, as you see here. Maybe trading here this green candle, for example, and then having here a tight stop placement and then aiming for this bigger structure high. You see here's also a risk reward ratio around 5. That's like 4.57, what makes this one a good trade. So again, step number 1, identify the biggest structure highs or lows. Like just like where do you see the market goes? Is it a contraction phase? In this case, market goes very often to contraction phases, or is it just like a bigger structure high or a low, such as here, for example? Step number 2, can you measure the retracement, what the market does in the same movement, and then see the market does the same length? That also occurs also counts for movement in your direction. Check this out. The movement from here to there is the same. The movement from here to here is almost the same. And then the movement from here to the first contraction phase here is the same. And then out of the contraction phase, the movement from here to there is also the same to this high. What we can say then, yeah, trading this opportunity is very good for step number 3. Like always having a 1 minute chart, smaller candles, and making always sure that we make the chart small like this, that you see what the market is aiming for, all right? Because I see beginners are just trading, for example, like that. And when we trade like this, we can see where the market wants to go. Like very excessive would look like this. Make sure you make always the chart small to see always the biggest structure highs and low. Hope you can take something out of this video. Wish you all love, good trades. JT out.